Let's bring in our senior markets correspondent, Kevin Green, to discuss today's market action and some stock movers. Kevin, first of all, great to have you. Good morning. And I know you're always keeping a close eye on certain levels. Tell us what specific levels are you watching to kick off this week?
Yeah, I mean, obviously we started off a little bit weak here for this session, only around 93 stocks actually in the green. So we want to actually see a pretty decent turnaround. Now, we had a really nice close last week, especially when we had that jobs report that was better than the street's expectations. And this week we have a lot more data coming out, especially when you're looking at the inflationary front. So if we're looking at it more of a longer term time frame here, the first area of support that we want to have is going to be 5,700. That's going to be the immediate area, and then really want to try to hold 5680. If we break below that, then we have this gap between 5680 and 5620 that we want to be mindful of. And if we kind of break through that 5620, we could actually have a reversal. And that would also break that upward trend that we've had from the lows that has actually been intact pretty well. And then on the upside, you're looking at 5800 this week. I mean, we've seen some of this price action that has been very aggressive to the upside, especially when you're looking at Friday. Low liquidity type of markets, favorable economic data can push markets higher here. And that's what we saw on Friday. You want to see the liquidity kind of backfill a little bit more aggressively than what we probably are seeing to start off the day. But we are definitely in an uptrend. So on the intraday basis, 5750 is going to be your immediate area of resistance. We've been hitting that level several different times if we're looking at a 10-day time frame, but we have been rejecting it. So we want to be able to reclaim 5750, try to hold 5730 as an area of support, and to continue to push higher here. And if we're going to push higher for the remainder of the week, 5780 is going to be your target here. And once again, on that chart, it kind of shows you 5720 been a key area of support. Yes, we've gone through it, but we have not gone through that range, if you will, or that balance area, if you will, continuing to bounce off. And actually, this is actually a bearish or a bullish actually setup that's taking place, kind of a wedge pattern to the downside, breaking up higher, come back, retesting 5700 and pushing higher here. Today, you just really don't want to see that fade and having us retest 5700. That would just kind of indicate that the market continues to try to push prices down, and continued retest of that level could actually kind of break it to the downside. So once again, we have a very long week ahead of us. A lot of intraday volatility that's already taken place. Elevated VIX for the most part have not been able to break through that 18.5 level. We've been keeping our eye out on that for last week or so, and in fact, it actually kind of ratcheted a little bit higher based on geopolitical risk. So those are the levels that I'm kind of keeping my eye out on for today's trading session, as well as for the rest of the week.
Yeah, so the S&P currently trading right around that 5730, the key area of support that you said. But let's talk about the VIX, because I'm seeing it trading above 21 right now. As obviously it's the anniversary of the Hamas attack on Israel. Still a lot of uncertainty about how Israel will respond to Iran. So certainly geopolitical risk in there. So help us make sense of the number that we're seeing for the VIX.
Yeah, so it continues to ratchet higher here. And actually, if you're kind of looking at the VIX compared to what the at-the-money straddle is for the S&P 500, there is a little bit of a divergence. The S&P 500 straddle is looking at around a 28 to 30 point move to the upside or downside, while the VIX is kind of pricing in about a 1.25, maybe around a 1.3% move to the upside or downside for the S&P 500. So there's a little bit of a disconnect there. Maybe there's going to be some vol sellers or some premium sellers kind of getting into the market to be able to try to capture on that dispersion trade that is taking place right now. But the VIX continues to move higher. You're talking about the geopolitical risk. Obviously, we have the anniversary that is pretty much here. You also have Iran closing their airspace until October 9th as well, in anticipation of Israel kind of retaliating back at them because of the ballistic missile strike that we saw on Monday or Tuesday of last week. We also have to keep in mind, too, there could be a little bit of a hurricane premium that's being put in the market. We have Hurricane Milton that is now, I believe, a Category 4, and it's expected to hit landfall either Wednesday night or Thursday morning. We've already seen the destruction from the previous hurricane. This could add on to that as well, and that could also disrupt energy flows as well as logistics within the Gulf region itself. And so you're seeing, obviously, crude moving to the upside, and there's been a very strong correlation with crude higher, volatility higher for now. And until we actually see that kind of dynamic really change, it's something that you really just have to kind of keep on your radar, both of those products, volatility as well as energy products.
Yeah, certainly not without headwinds, but you say this market is very much in an uptrend. What would make you less certain that this is a market that's in an uptrend? Would it be breaking through that 5,700 level or 5,680 or something bigger than that?
I would say 5620 would be my area of concern. Anything that goes below that, once again, we kind of have a gap when it comes to dealer positioning. And what we mean by that is if there's not really a lot of options structure there, you can have these wide-ranging type of movements. Now, it's not only just the option side, but it is a leading indicator and a good indicator to see if liquidity is going to dry up and we can continue to have a push to the downside. So 5620, below that would be my area of concern. If you kind of go back to that daily chart that we had that really kind of reflected the last 3 months, you actually did see a very strong power candle on Friday. Now, you can make the case maybe it's a hanging man candle, which could be reversal. Basically, you try to push higher and then you push lower. You had some buyers kind of step in, but it's at the top end of a trend. You can make that case, or you could say, okay, it was at pretty much a little bit of a pullback. You had sellers flush the market, buyers step back in, and you want to see a continuation here for today. I'm not too concerned yet that we are seeing a breakdown. And Caroline, this is usually the last week. If you're looking at a 20-year basis for seasonality, the last week that we actually do see a fair amount of volatility kind of hit the market here. We also have the October 15th tax deadline, so maybe you're going to have some tax loss harvesting taking place as well, which is more mechanical or structural in nature rather than something that people in the market are kind of fearing of an event occurring in the near term.
Okay, so appreciate you breaking that down for us. Let's talk about some movers this morning. Netflix shares down about 3% today. This has been a big winner, though, and it's catching an upgrade and a downgrade this morning. Fill us in on both.
Yeah, a little bit of mixed feelings when it comes to analysts out there. We have actually Piper Sandler that did actually upgrade the stock to overweight from neutral with a new price target of $800. That's up from $650 here. Now, they do believe, once again, that Netflix is the clear winner when it comes to streaming. And they do have, they said based on their neutral rating previously, that was based on valuation concerns and that the premium for the stock really didn't match up with the fundamentals. But they do see growth when it comes to the ad-free business. And maybe that's something that has been overpriced or overlooked by these analysts. They do believe that there's multiple scenarios for a revision of the upside when it comes to earnings expectations, and that the subscription model is a little bit more attractive than what they saw in the past. And they believe that that also can overcome some weaker macroeconomic data. Now, we all have on the other side of that Barclays. They are actually downgrading the shares to underweight from equal weight with a unchanged price target of $550, kind of going on the other side of the coin there. They believe that the valuations are pretty rich at this point, and that the expectations for revenue growth seem to be more in the low double digits, and that could actually be a little bit more challenging here in the near term to try to have that re-rated to the upside, and that they believe that there might be some trade-offs when you're looking at the streaming business as a whole. So once again, a mixed picture, seeing the shares down here. Once again, I think that might be not only just on this downgrade, but just from the weakness from the equity market just to start off the week for now. But Netflix has had a really nice run to the upside here, so a pullback technically would not be a bad thing for those that are optimistic about the stock and looking for a buy entry at a cheaper price.
Yeah, shares about 3.5% away from the highs. I was taking a look at that $550 price target. Seems low for a stock that's trading at almost $700 a share. I guess hence the underweight rating, but it's actually not the lowest on the street. The lowest on the street is $545. Highest on the street is $900. So yes, I would say pretty mixed feelings today and overall for that name. Meanwhile, Wells Fargo is downgrading two home builders. You're taking a look at Lennar and KB Homes, both under pressure today. Fill us in on that note.
Yeah, you're seeing maybe some of the valuations becoming a little bit rich when it comes to the market, especially when you're looking at the home builders. So they have downgraded KB Homes to an underweight from equal weight with a new price, but raised the price target to $83. That's up from $80 here. They think that there's a better values out there when it comes to the home building space as a whole, and they believe that KBH could actually lag behind its peers over the next phase of this cycle that we have seen. And when you're looking at the margin dynamics, I think that's really a concern, and they kind of put that into the Lennar Lennar note as well. When you're looking at a downgrade for Lennar, downgrading that to equal weight from overweight with a price target of $190, that's down from $205. Talking about, once again, the unexpected adjustments when it comes to pricing in order to try to spark home demand, and that could eat into margins here, and that could actually impact them for fiscal year 2025. And they believe that the pivot that they've seen, especially when you're looking at the Florida and Texas markets, has actually underperformed. And that is an area that I think a lot of economists have been looking at, Caroline, especially when you're looking at the Florida area, where that has been a market that has had a significant amount of tight supply, but you're seeing some rapid growth when it comes to inventory levels there, as people are looking for other places to be able to live because of, not only just the price of housing in general, but also when you're looking at insurance rates and other factors. So once again, kind of a re-rating, setting the expectations here, resetting the expectations. And once again, home building stocks, I don't think anybody would expect that they would be at the price levels that they are at right now, based on the dynamics that we've seen over the last year and a half, 2 years when it comes to rates. So they performed very well, but it seems like Wells Fargo is saying maybe there's going to be some other opportunities here in the near term from some of the underperformers in this space.
All right, KB Home and Lennar both under pressure today. Lennar down about 1%, KB Home down about 2.4%. There are some winners today, though. One of those is Pfizer. Shares of Pfizer are up about 3% on news of some activist interest in the company. Tell us more about that.
Yeah, so we actually have Starboard Value has taken $1 billion stake into Pfizer here, and they want to actually see some changes when it comes to the company. Now, we've seen some of these activist type of investments taking place over the last month and a half or so in other stocks, and it has been very well for those stocks, and you're kind of seeing that same type of reaction. They did approach the former Pfizer CEO and former CFO for some assistance in trying to adjust the company's operations, and both have expressed interest in being able to assist. So that's kind of the first wave of adjustments that they really kind of want to see, maybe changing the top of the leadership change, and then also maybe looking at some of the other products within their backlog. I mean, it's been very tough post-COVID for them to really try to capture the market's attention with new products online, and in fact, they're kind of cutting products that they spend a fair amount of money on here. But once again, they look for opportunities where stocks are underperforming, and they could actually see a decent turnaround. Sometimes this could actually be very abrasive when it comes to the existing leadership of the company. But for now, we are seeing the shares higher, and let's see how this develops over the next couple of weeks and if not months here.
Yeah, shares up more than 3% right now. Kevin Green, thanks so much for discussing those movers and your key levels.